Hello, thank you, Scott. Hello, Andy.
Hello, Steve. Hello, Scott. Hey, everybody.
All right, welcome to the Tuesday trade of the week. I can't believe Tuesday 5 Eastern PM has snuck up so fast from the last Tuesday, but here we are. Got lots to talk about. Let's get right into it. I'm assuming you all can see and hear my screen, so I'll just keep on talking here. The old disclaimer reminding you that we're a software as a service publisher. We publish content and data. We are not investment advisors. So anything you see or hear today should not be construed as investment advice. If you need investment advice, you're in the wrong place. You need to seek out somebody who's gone through the rigmarole and passed all the tests and got all the licenses and can actually charge you a fee for helping manage your financial advice. So that's out of the way. Yeah, the test drive, it's coming up. We turn on everything for people to try and kick the tires. There is an $8.88 charge, but that's going directly towards real-time data, which you will be using in your test drives. So there really is no. Hang on a second. There really is no reason not to pony up the $8.88 because you're going to get some real-time data for a whole week. You'll be able to try everything, kick the tires of all of our tools in our platform for the week starting July 23rd. So keep an eye out for that. There'll be more to come on that for sure. You're not alone with Trade Ideas. We're a vibrant community of traders. We've got a lot of onboarding and information that we can help people with the learning curve. Starting with every day is the Trade Ideas live trading room that Barry hosts. He's trading his own account, he's using our technology, and he's monitoring and doing a great job of being a moderator in a room there of many hundreds of people. And the best thing about this room is that it's high quality and it's free. There's a lot of people out there that are probably paying 99 bucks a month to get in a room such as this one, but this is a great one, and it's open from bell to bell during the market days, and Barry's in there along with a handful of other really good traders that are basically kind of showing you the way in which they're looking at it. So it's a great pack hunting room. A lot of good traders in there with different styles and different methods, and take advantage of that because it's available to you for free. The afternoon webinars, which we're doing right now, are at 5 p.m. Eastern time, Monday through Thursday. Yesterday I helped Jamie out. Today is the Trade of the Week webinar. Tomorrow is Q&A with Brad and Dan. And then Thursday, we'll round that off with Andy and Jamie. And then on Friday, notice the bottom there is TI University. I'll talk more about that in a second. But Friday sessions are open. We have 3 hours of come one, come all. You guys shape the content. You tell us where you want to go, and we demonstrate things for you for 3 hours in a live format, just like we're doing right here in GoToWebinar. So a lot of things, a lot that you can sign up for and get continuing education. Speaking of continuing education, we have a 4-part class that starts on Mondays, Beginner 101, and goes through Thursdays. I did the 201 class this morning. Each class is about an hour and a half long, so it's a 6-hour course. It was recorded for those that want to go back and look at it, but when you sign up for TI, we no longer do the one-on-one. We're just too big now, and it's no longer a good, efficient use of time to be doing one-on-one, so we're doing the group method. And every Monday, we get a whole new group that comes in, and they go through the program Monday through Thursday, and they come out the back end a lot more knowledgeable. And then, of course, Friday, as I said, come on, stop by on Friday anytime between 11 and 2 Eastern, and tell us what you want to talk about. All right, so all those things we provide to help people, and I think it has a lot to do with our subscriber retention rate, and the word is definitely getting out, guys. Great product, even for your own custom scans, but the AI was launched here in this particular bar, and we've had a nice growth curve since then for sure. So the theme for our week is always man and machine combined. The old saying, or the new saying from the current trader, Paul Trader Jones, no man's better than a machine. However, and this applies to us, and no machine is better than a human with a machine, and that's us. We're a human with a very powerful machine, and I want to talk a little bit more about that going forward today. So let's get right into it. The agenda for today is We'll start with some market recap. We'll kick it over to Andy for the AI Holly recap. And then the trade of the week, which did not trigger this week, but I will talk a lot about how it was picked and why it was picked and where it might go from here and what to do. And then there's going to be a lot of charting class today, guys. What I want to do is go into a couple of top list scans that I have, and then a bunch that I found today from Holly, because one of the more common questions is well, is the AI a swing trading device? And yeah, it is, but it's first and foremost a device of curation of a handful of stocks that we have to filter through our prism of understanding. Remember, I told you, man and machine. So we can't just rely on plugging in a machine and having it do everything for us. But when the human has a machine, we can really drill down into some quality setups and some quality ideas, but it still does require the human discretion to help see us through that step. So that's where we're going to go today. Get ready. We're going to go to chart school today, you guys. I got some things I want to show you. So with that said, I'm going to minimize this and go into the SPY daily chart here. Open this up a little bit. Maybe some of you were with us yesterday in Jamie's webinar. I talked about this big, long consolidation, turning into a large cup and handle here. Way back here was kind of like plucking a rubber band. We got a lot of amplitude to the downside and back to the upside, and more amplitude bound to the downside. And we've bounced off this 200-day moving average a few times now, and the last two higher lows that we've put in have not touched that 200-day. And what I said yesterday was we had a lot of good effort expent getting up to these levels of supply, which if we scroll back and look left, these March highs here, there's going to be a lot of sellers that are still laying in the lurking up here in the darkness, and that's kind of what happened today. But back to yesterday, before today's candle, I told Jamie and the crew that were in attendance that this consolidation was much needed. Again, bouncing off of a low here, 5 or 6 candles, we're expending a lot of energy up to these levels, and it's very unusual, very unlikely to see price slice through resistance like a hot knife in butter after already having all these 5 or 6 candles behind them. You've expended a lot of energy, and price action expends energy as well. The market does move in 3 steps forward, 2 steps back fashion. And so what I said was, there's 2 ways to consolidate: either pull back in price or move sideways in price. And moving sideways in price was the more bullish of the 2. And that's what we had yesterday. Well, going into the close, we had that to talk about. I said everything's shaping up really nicely. There's not really too much here to be bearish about, guys. I think it's going to be a foregone conclusion. I said yesterday that these prior highs are going to be assaulted, but we need some sort of consolidation first, either a pullback in price or sideways action. Well, yesterday after market, of course, we had the Netflix earnings, and we talked a little bit about how that might enter into today's action. But all it really did, if we go to the Qs here, all it really did was pull back the old slingshot and give us the pullback in price. And then, of course, as soon as the bell rang, it was off to the races on the buy side. All the scans, the AI, everything was showing us and pointing us along today for the most part. And Andy will get into that for sure. But we got what we needed is what I'm trying to drive home here. We got a little bit of sideways consolidation and then a nice gap down pullback. Like I said, that's exactly what the troops needed. Just kind of a slingshot into the master session today, which was a very nice rising tide, broad-based rally on the intraday. If you look at the intraday, look at this big gap down, pretty much a nice smooth ride all the way up S&Ps, and then in the last hour and a half or so, a little bit of choppiness. So guys, there's really nothing in the bearish camp that I can even throw at you right now. Also of interest, let me scoot back here on this line, which is showing that going back to the March highs here, well, it superimposes into the intraday chart. And look at what happens, how resistance becomes support. So we broke through that resistance on this candle midday, and then look at what happened the rest of the day. That line was being held in the sand with vigor by the buyers. And so I fully expect that line to continue to hold up tomorrow, barring any unforeseen bad news. And the markets are basically going to want to build on top of this orange line here and move higher. So again, I don't see any possible reason to be bearish right now. There's really nothing that would say to do so. Now let's go look at the Qs. same thing, as I said, pulling back on the slingshot and launching it this morning. So a nice broad-based rally today. And guess what? The Qs actually made all-time highs again today. We closed just off all-time highs today. So we'll see what tomorrow brings. But again, nothing to be bearish about over there either. IWM. The Russell 2000 ETF was really leading the way back here when we were moving higher. But look at what's happened the last few days. It has not participated, which is kind of curious. It has not participated the last few days, much like the SPY and the NASDAQ QQQ have. So a little mental note there, but still nothing bearish really to look at there. You could be making a nice little cup and handle here. We shall see. I don't know. That's kind of in no man's land. And then lastly, the Dow is also still kind of playing catch up from where the NASDAQ and the S&P, you know, the S&P broke above these respective highs back here in March and April and February, and the NASDAQ's at all-time highs, but the Dow is just bringing up the rear in a very slow snail's pace. So it seems to me that we're finding our leadership back in the QQQs, the NASDAQ, for sure. Andy, anything you want to add?
Steve, no, I think you covered it very well. I think, yeah, the IWM, I think it's just a matter of handing the baton off, you know, to the Qs and providing leadership. And of course, the spiders are participating now, so money's got to come out of somewhere. It's just we've had this rotation forever, it seems like, and I think that's what we're seeing. Now, getting back to the spiders, I expect we're probably going to see some follow through. I mean, we basically kind of closed right at that March high. So everything looks great. The jury's still out. I mean, because this has been a level of distribution, and you know, if for any reason we do open up and sell off tomorrow, you know, we could come back down and maybe test that upward sloping 10-period moving average. But no, yeah, you're right. Everything looks bullish here. You know. Spiders and diamonds, especially the diamonds, have a way to go, but and even the XLF is trying to make some noise lately. Very little noise.
Yeah, and I had mentioned before in the past, you know, Credit Suisse, those European banks, they're still flirting with disaster down here, but not really at the moment. Deutsche Bank had a nice stick save, gave it a little bit back today, but a big gap up yesterday, I should say. You know, still keep an eye on these European banks. If there is any black cloud or any, you know, wet towel to throw on this fire, this juggernaut of that we have, it could be the European financials. So I still think definitely keep an eye on that for sure. All right, where to next?
I believe it would be Holly.
Would be Holly. All right, so coming in today, my observations, looking at I always try to keep parked on the main Holly. We had, you know, 6 long strategies and 3 short strategies, but when we came in and trade started firing, it was pretty obvious what direction the AI was looking to go there. But I'll pass the baton to Andy. You want to use my screen or your screen?
I'll grab it. I'll grab it real quick.
Okay.
Yeah, just hold on. Change presenter here. All right, guys, since we got about half the attendees in here today are non-subscribers, let me just kind of give you a breakdown real quick of what Holly is, okay? Well, today, as of probably about a month ago, you see 3 Hollies in here now. At one time, we just had 1 Holly. That is the what I like to call the Holly Classic, which is basically has not changed. This is the same Holly we've had now for over or going on 2 years. So, but a couple of months ago we added more Hollies, and what we're going to do here, guys, we're going to have a dashboard, hopefully sooner than later. I'm thinking it is going to be pretty soon, where it's going to be easier to see when Holly fires off a trade, you know, instead of just looking at the P&L. It's very difficult to follow the trades, but we'll have some sort of dashboard, so you will see when each Holly fires off a trade. I say trade, it's an alert. Holly's not trading real money, not yet anyway. All right, so what happens is Holly is equipped with about 45 strategies, and at the close of each day, Holly will take those strategies and she will run it what we call the combine. And what it is, it's basically taking each strategy, back testing it over and over again with different scenarios using all of our filter sets and combinations that would take us probably a year to do. You know, she does this for about 8 to 10 hours each evening. And once she gets them optimized, she throws out the ones, not throws out the ones, but certain strategies will make the final cut. And those final cut are presented each morning for you guys. These are the strategies. And each Holly will have strategies. Some of them will be the same with different parameters. Okay, guys, so what you have to do is Holly will send out alerts throughout the day based upon these strategies. And you can see here the strategy name coinciding with the strategy name over here. All right, so I just wanted to give a kind of a brief synopsis here of what we're looking at. Now we do keep what's called risk off and risk on. Risk off is getting out of Holly anytime Holly makes an exit for one of her 5 exit reasons. I'm not going to go into all 5 of the exit reasons. You can kind of see them here on my screen. And risk on is if you hold each trade, you know, throughout the entire day, and that's the closing, basically closing price, risk on. We created risk on to help you become better traders. So in other words, if we just kept risk off here and you get out of a trade, you're going to move on and not even go back and look and see how that trade ended up. Well, now you can easily look on your panel here and see risk on compared to risk off, and maybe it's going to help you become, you know, a better trader, keeping, you know, enabling you to hold trades for longer. All right, that being said, I thought Holly had a great day. You know, now we did have a lot of times when you have a gap down or a gap up, it kind of may throw off some of our configurations a little bit, because you know, a lot of these configurations are based upon a daily chart pattern, and so when you have a gap down, it could throw off some of the configurations, and we may not get a whole lot of alerts. But today was an exception, and boy, it did really well. And I love it when risk on is, I love to see risk on doing well, but I also love when I see risk off up there as well too. That tells me the exit reasons are all working, and then of course the trades continue to work. This is Holly Grail, which is our basic classic, our very first one. And I'm going to go into Neo real quick. I don't have time to go into all 3 of them, but you can see the score there on Holly 2.0 wasn't bad either. But I'm pulling up Neo because I wanted to show you, once again, all longs. Holly Grail had 1 short. So the theme for the day was long, and I don't have to tell you, looking at the market, it was definitely a long-sided day. But when you look at some of these, let's just take a look at some of these individual trades. Now, the big one that I have to show you is PED. This was just a credible trade, because you look over here on risk off, Holly made 32%. Guys, that is just incredible. You don't get those kind of performances, you know, profit on your blotter too often, and it's
risk off. Yeah.
Yes, this is risk off, where Holly entered the trade. You can see where she entered it right here. Okay, at 204, and entry price 204 right there. And you can see where the shaded, Holly gets out is when the darker green turns to like a lighter green. So there was her exit right there at 271. So Holly gets out right here on this bar right here, and wow, that's you know, 64 cents on a $2 stock. That's a great move. As you see it right there, it's 32% move. Risk on was still a 21% move. Another great trade, this PPG, just beautiful. It's a no pain trade, and I love when I see these. You got an entry, and look at this. It never went below that entry price and just sit there and just went up, stayed above this 10-period moving average, the fast line, Steve and I like to call it, all day long. Good example when Holly gets out.
Life on the fast line.
That's right, life on the fast line, that's right. Holly gets out of the trade, maybe you bang out half with Holly and you keep holding it until maybe it breaks the fast line, or Some people like to use, I've been showing people how you can use a bar reversal. In this case, you wouldn't have made that much more. You would have gotten out on this move right here. But try hanging on to some part of your trade for a technical reason. I've been preaching that a lot lately, okay? Don't get out for a monetary reason just because you made X amount of dollars. Make it technical, and I promise you, if you have a technical reason for getting out, it's gonna enable you to hang on to trades longer. There's so many more I can go through, Steve. Seeing some new strategies in here, you know, close to a cross. This was one I think we put in maybe a week ago. I've been seeing one called the Vault. I didn't see it today, but here's one CE. Beautiful little trade there.
Just so you know, I'll jump in. I hope to have those thumbnail strategies updated, some of the new ones you just called out there. We've got a lot of them updated on our website at the bottom footer under FAQ, but our hope is to have the new ones in here, hopefully updated by tomorrow, Thursday or Friday at the latest. The Fast Line Marguerite is my pet name, my special name for the 10-period simple moving average.
Yep, Steve and I used to use that a lot at Today Trader when we were basically doing what Barry does all day. Yeah, getting back to CE was a nice little trade too. You can see the entry there, didn't go much lower, and then kind of catapulted higher along with the market. But you know, like I said, I could go over more of these, but you guys can look at them on your own if you have this subscription, and if you don't, all I can tell you is, guys, you're missing out. Holly has been on fire lately. You can get some great ideas watching Holly. I know if you're in the room, Barry trades a lot of these, so if you are in the trading room, you're getting to see people in action trade some of Holly's alerts. And incredible performance today across the board for Holly, not only on risk on, but also on risk off, which is good. Now, let's face it, it's always best. It's always going to be better when you have a nice trending market. But man, Holly's been doing good for a few days in a row now, man. It's been impressive.
Yes, it has.
Well, right,
I'm gonna follow up on a few other things
Sure.
in this webinar when we get to that point. So yeah, I'll take the screen back.
Okay.
Let me get all the unicorns off my screen. And all right, welcome back everybody. Okay, so what we're gonna do next is just kind of plug in here to the trade of the week, which is what the webinar is actually named after. This week, the trade of the week was Diamond Offshore, and it did not trigger. Diamond Offshore was curated and located by us actually a week ago, and then it did that funny thing where you see here it pulled back and then had another gap up on, this is a Tuesday here, last week, and then it finished up the week on this green bar right here. What we noticed was it had kind of a double back and fill of a gap. First one there, and then another gap, and then a double backfill gap. And then, I mean, I could essentially try and draw some trend lines here to show you what we were seeing on Friday of last week. Here we go. All right. All right, so barring today's candle, and then I'll add this other little markup here. That's not what I want. Why does it always takes forever for me to do trend lines?
They're hard to do.
Hard to do. You got to grab them just right. So what we were looking at was kind of a wedge going on here. Basically,
I think you had it right. Yeah, kind of.
Yeah, it was close enough. I mean, for the most part, you know, we had a real nice wedge. We had a gap and then a pullback double fill. Same thing with the gap, big move, pullback double fill. So it was kind of compressing in a nice little tight range. Well, what we needed, essentially, the catalyst, was for oil not to do that. Basically, it had pulled back, and if the oil had dug in and made a higher low here and started to move higher, which a lot of people kind of thought, the energy stocks would have paid attention, but they didn't. So, you know, in the bigger picture, we were coming up very close to these resistance levels, and we wanted to call something that definitely had a trigger behind it, not just jump in and buy it on Monday, wait for the trigger. And again, in this case, the trigger, I don't actually have the content, but the trigger, when I clicked on the symbol DO, which by the way was in the scan called bullish candlesticks, bullish daily candlesticks. When you click on that, you'll get a red line, and that red line essentially drew across my blue line of the price alert. Let's turn these lines off now that we've focused on that. So that blue line price alert essentially is right above this red candle right here, and that's where the trade ideas red line came in 2 candles ago, last Friday, if you clicked on that. And so we didn't know, obviously, yesterday was going to be down a little bit, or up a little bit. No, down a little bit, excuse me. And then today down a lot more. So the trade is not triggered yet. However, there's nothing that says we can't have oil tear overnight for some reason. I doubt it's going to do it now, but if it does, tomorrow, if the energy stocks are strong, I mean, here is our trigger, 2098. And this is good for the week. You know, there's still something to be said if the price action recovers tomorrow and then goes through and triggers. We'll certainly be happy about that. So we want to make sure we get confirmation a lot of times. Sometimes no. Sometimes we just say jump in and buy it at the open. But this one, we wanted confirmation that that wedge I was drawing for you with the double gap fill inside, it was really coiling up for some nice potential energy to push through. But I think the one thing that it was missing, of course, as I said, was the commodity of oil participating and moving higher off of that pullback last week. So we didn't get that, but we may get it very soon. Checking in with last week's LSCC, still kind of hanging in there nicely. You know, I hate the way price action is, but we have to live with it. You know, we had a really nice push up. I think it was up almost 9 or 10% on this second day of trigger last week, but then a big tail pulling back. And we all know, well, maybe we don't all know, but we all have heard me say over and over, you see those big topping tails, usually not a great sign for the next 3 or 4 days to move back up. And so the price action seems to have kind of worked off the fact that LSCC went higher and then pulled back quickly. Got ahead of itself, and so we're going to work off a little bit of that, but still doesn't really mean, I guess what I'm trying to say, there wasn't much damage done to this daily chart here. We still have higher lows, nice little bottoming tail today, closed kind of strong into the close. I don't see why we can't move higher and slowly come back and try and get these lines. But Monday, Tuesday last week was a really nice push through the trigger price. Marguerite, that means the trigger price, and Diamond Offshore is that blue line. We're not going to jump in and trust this thing until the price trades through 2098, and then when it does, my price alerts will go off and let me know that the trade ideas, trade of the week, is in fact active. So that's last week's trade of the week, and the week prior, LSCC still kind of hanging in there. Did I miss anything to touch on, Andy?
No, I will just say that Diamond Offshore is holding up relatively much better than the commodity and the sector itself. So that is one, yeah, that I'd still have my eye on because
that's true.
It's holding up well.
And yeah, one more look at USO. It's been coming off pretty hard the last couple of days, but DO is trying to hang in there. All right. Okay, so that's the trade of the week portion. As I said, this is really going to be a day of charting. And let's get right into it. What I wanted to do was I wanted to go back through a couple of my scans, and then a couple of the AI Holly scans, and again try and help people see what I see, or what Andy sees, or what traders see that says, hey, this one might be one that we want to keep on the radar for a possible swing trade. And what I'm gonna do is you guys are all gonna have parting gifts today. What I mean by that is first thing we're going to do is we're going to open up my price alerts before we get to this. And I want to clear them out because they've been coagulating in there. See, I used a better word, Andy. They've been coagulating in there for a while, a couple months now. And it's time to clean them out. So I'm going to start at the top and go down. I'm going to hold all of them down, every single one. I just highlighted every single trade using the shift key. Now I can right click and there's 67 alerts I'm going to delete. Hello, we're going back to a clean slate. All right, so I promised you guys a parting gift. What I'm going to do is we're going to set some price alerts from some of the scans I have on some of the things that I think look interesting today. And I think 5 or 6 of them are coming from Holly. And so, this is the drill that you go through as a swing trader trying to find your next good setup. Let's go ahead and start. So we cleaned out the price alerts to start with. The first scan is coming off of my trend change lubricant, which is this one right here. And I see one of them on there. The other one didn't close as well. Let's take a look. All right, the first one is MNK. All right, MNK. Now this trend change lubricant is looking for high short floats, 39% of 80 million shares. But here's the bigger picture. It's a downtrend. We're breaking a major downtrend here, all right? Nothing wrong with these kind of charts. This thing's floating above all its moving averages, bouncing from back here and putting in higher lows. Now, again, I like the sideways consolidation. Those are my favorite, and they're just looking for a reason to get back above these 3 or 4 days. So I'm going to highlight there. That is 2186 on that candle. Right click, create price alert. 2187 is what we're going to go for to alert us. And we're going to remind ourselves, and this will show up on your cloud when I give it to you at the end of this. It's going to show up as well. We have how many short? 39% short float. Could be short squeeze. Question mark, question mark. Oh, look at me.
So I like it.
Now, let's go back to capitals and turn my caps off. All right, so I'll use all capitals to say I'm very emphatic about this first one. All right, so there it is. There's the nice line, just going sideways, sideways, waiting for a crack in the ceiling, and boom. That could be either a great intraday day trade idea as the short sellers panic and push through, or it could even be maybe sell half and let the other half swing. It's up to you guys. It's your discretion. But we're using the technology, man and human being and machine, to try and find some good setups here.
And what else do you notice? And what else do you notice in that chart?
I see a buy tag from Holly.
Yeah, a couple of those. Yeah,
a couple of them. This one was a bit early. Well, hey, it goes to what I was just saying. What happens when the price gets ahead of itself a little bit? You guys imprint, seriously, imprint on this topping tail here, because if you're trying to go long the following day after you see a long topping tail after a move, just tie your hands behind your back, wait for the pullback, okay? Yeah, hang on to that stock chart request, friend. We'll take a look at that when we get through here. The other one that I wanted to look at that's not on that scan at the end of the day, which is of course interesting, let's see how it closed, was IP. No, that wasn't it at all. What was it? It was PI, Magnum PI, excuse me. Well, I can see why it came off, that little closing wick at the end of the day. Look at that, it actually kind of triggered through and then pulled back. Well, I'm still interested in this, and I still think it could be interesting for people. If we go to our single stock window here, we can see that this one has only 17 million shares in the float. That's a pretty low float stock, and 43% of them are short. So I'm gonna keep this one on the board, even though I don't like the little red candle at the close. I'm not gonna let that, what's that?
Oh, excuse me, I'm sorry, where did you get the PI from?
I told you it didn't show up at the close on my trend chain.
Oh, okay, okay, gotcha.
During the day, I was making notes of some things that I want to keep an eye on, and I didn't mark them up until the close so we could all do it together. So basically, you guys are kind of, looking over the shoulder here of an end of day method. And I want to try to explain why I like some of these charts. Again, why? There's 7 days of sideways action. Got the moving averages fanned out, 10 above the 20, 20 above the 50. This thing might want to go if it tries again. So we got to take the high of this candle, which is 24.74, and we're going to go to 75. Right click, create price alert, 74.75. Also giant short float. My single stock window says 43% short float, exclamation point. Could be a major squeeze. All right, there's 2 price alerts. Let's just go back and let me show you guys what's happening here behind the scenes. Price alerts are slowly populating with working alerts. They have not triggered yet. My notes, I'm going to continue to take copious notes, so when they do trigger, I know what I was thinking when they trigger. All right, so now I'm going to move over to only one that I saw on my Squeeze Me 52-week high, which again is looking for short squeezes. This one is going to be, which one was it? SFIX. And did SFIX do the same thing to me? All right, let's take a look. Why is that not on here? I bet I know why. Here's why. Look at that, Andy. For some reason, I saved my dang layout earlier. All right, live. There it is. SFIX, everybody. 38% short of a medium float, 26%. Okay. What's today's high? Oh, shoot, we didn't get it. I think I noticed something, Andy. When you click on it, you don't always get these. When you click on a symbol, you don't always get the high-low closes up here. So if you go and come back to it, SFIX, I've got the high-low closes again. So at the top is what I'm talking about. So the high was 34.60 today, 34.71. So 34.72 is our bogey. Right click, 34.72. This one has 38% short the float and 52-week high. This thing triggers, it's going to be at a 52-week high. So I'm going to put that in exclamation points and capitals. All right. You do not want to be short this stock when 38% of the 26 million in circulation are also short, because this thing has volume picking up and it is ready to break out to a new 52-week high. You do not want to be that person that is stubborn on the short side. We, on the other hand, are trying to capitalize on their misfortunate setup here and make it our fortunate setup. All right, so those are the three that I found interesting based on my typical go-to end-of-day scans. The others are, I think, where we can really get some interesting information here. I pulled these from all three segments of Holly that I found interesting. The first one was ACAD. All right, there's our buy signal, nice green candle today, but here's a stock that's kind of bottoming out perhaps, and it's kind of been going sideways, and it looks like this might be a double bottom down here. I'm going to go ahead and say this high corresponds to this high and this high over here, almost a triple high. What's this one? 1845 and 1844. Let's go 1846, and we know that we've cleared 3 resistance candles, and there's not a lot of short on this one, is there? 19, not bad. I'll go ahead and add that 19% short. But again, this one came from Holly. Holly call, break out of range and base, question mark. That'll be that one. Okay. Now again, I'm doing this for you guys. At the end, I'm going to be able to share a cloud code that you all can use, and it will populate your price alerts. So when these things trigger, they'll be triggering for all of us at the same time, which is kind of cool. NBIX is my next one. Let's look left, see where the price has come. It's come from a long way down. So this has been a nice long uptrend. And we had a nice candle today on the heels of yesterday's volume as well. I think this little double top here is going to be coming back into play pretty soon. So the high is 106.21 there and 106.26. We're going 27. 106.27. Might even be a new all-time high. I'll have to check on that. But it's definitely a new 52-week high. Any shorts in there? Not much. 7% is not much of a short float to speak of. So we'll keep that out. A new 52-week high found by Holly. So that's why I like that one. All right, the next one that was coming through the Holly trades today was Zendesk. We actually use Zendesk here. We can attribute to the value that it provides. It's a software customer solutions, and the price action is telling us as well that people like it. Look at this. We had 2 buys. We had a buy back here on the pullback this day, and we had a buy today on Holly. The actual 52-week high looks like 60.44 on that day and 60.54. Okay, so we're going to go 60.55 through today's high. So this is basically a follow through. Let's change the price to 55, as I said, and we're going to call this one follow through for new 52-week high Holly. All right, I got a couple more here, 2 more. VNOM. I like this one as a pullback. All right, so this one's not our typical breakout. This one's going to be a bar reversal. And we had 1, 2, 3, 4 days of pullback, and then a nice bounce right at the 50, and then closed way above that 50-day moving average. Where would you think we'd put an alert on this one, Andy?
I like, that's also on my pullback above 50 alert. That phenom. So the strategy behind that theoretically is it takes out today's high.
Okay.
Then you have a bar reversal after 5 down days. Yeah.
All right. So 31.32. We're going to go to 31.33 and call that a bar reversal. Bar reversal from pullback found by Holly. So you can see the 1-2 punch of using some curated ideas and then looking at the charts. There's never an excuse for more chart study. I mean, this is price action. This is footprints in the sand. It's what the herd is telling us visually, rather than what they're telling us with their mouth in terms of press releases or upgrades or downgrades. The price action got ahead of itself, pulled back a nice 4 days, and looks like it wants to reverse. There's a lot of other charts on here that were okay, but the ones that I came up with here, I think stood out to me the strongest. And we don't want to have too big of a sample. So the last one that I found was TGC, and this one is kind of in its own little mind. definitely a low. I wanted to find one for the people that like stocks under $2. This one might come back to life. We don't know. Typically, after you have a big run up like that, look at that giant topping tail. You don't want to go anywhere near that the next day. We had another red candle and a red candle the 2 following days, and the chance to move higher. So we're creating kind of a little range here. But what I noticed was these 2 wicks. Let's see, that was $1.34 there and $1.33. So we're going to go $1.35. If the price action wants to break it into the $1.35 range, this was also found by Holly, and could be another small cap range break.
Pedro makes a good point, and I've noticed this too as well, Steve, and I think I know the reason why. Why are we not seeing the Holly buys on some of these?
Because I'm not touching them. Let's
Right.
do that. Let's do that right now. Let's find TGC. Where's TGC? It's probably well, let's do this with one that I know is on here. Okay, ACAD. I did ACAD earlier. Let's click on ACAD, and there are the actual high buy and sell Hollies from today, red and green, versus, I'll just clear that and then I'll type it this time, ACAD. We still get some sort of a, oh, that's funny, now it stayed in memory. Okay. See, since I was typing these.
Well, I think what it is, Steve, if it's on another
since this is Holly,
yes.
Okay. So what was
you
the one?
You probably have to go to the segment that it's on.
Okay,
so you'd
TGC
probably have to
is
go
giving us, yeah, TGC is giving us the old orange, or whatever that color is, blue and orange. That means it's not a Holly trade, it's just a simple trade ideas logic. You typed in a symbol, and the trade ideas logic looks in the history and gives you some ideas of where a downside stop would be, which I agree on this one, 92 cents probably showing us, and an upside target. Now, if I do click into the Holly, I think that was from Holly 2.0. Let's just take a look. If we touch TGC, then you're correct, Andy. I think that's the one. Marguerite, they don't have to be red bars for those high topping tails to not look as good. Just that long tail tells me there was a major intraday rejection, and that's not what we want to see. All right, TGC, cross your fingers. Click it
works.
in the active Holly, and ta-da, there's our AI entry signals, and it turns to red to green. So good question there. We kind of worked through that together. Thank you. And yes, back to Marguerite, either one of these topping tails I want nothing to do with the following day or the day after. But now we've kind of worked ourselves out a little bit. Now it's maybe trying to come back for more. But the day after, a big tail, doesn't matter whether it's red or green, I don't care. That was major intraday rejection, and those intraday rejections, they take a couple more days to resolve themselves. So what do we have left over here? We have a price alert that has, let's count, 1, 2, 3, 4, 5, 6, 7, 8 working price alerts, and they all have a reason behind them in the notes. 70% of them were found from Holly today, but you know, for swing trading, this is the way to do it. Not jump in and hope that the price goes the way you're looking for. Find candidates from a curated list of setups, and then use your price alerts. And then if they trigger in real time, you know, let's see the one I really like. Let's say this one tomorrow. Let's say this thing triggers. But I look down and the S&P is selling off hard on bad news and down 1% on the day. Are you going to want to take these trades long? Probably not. That's where the human being comes in for discretion. All right, the technology and the machine gives us the ideas, but the human being is the ultimate curator to decide whether or not you're going to push the button. Just because a price alert triggered on a day when the markets are down 1 or 2%, well, you might have to say pass on that one and jump in and use your human discretion. All right, so let's share those before I forget, and then we have time for probably 3 charts or so. I know somebody already popped one in there, but if somebody else was thinking about having us take a look at a chart that you're either in or thinking about getting in, let us know if you're in it, long, short, or thinking about long or thinking about short. And here's how you do the shared price alerts. All right, I'm gonna copy them all, right click, share, 8 selected price alerts. Then we go into our cloud theme, copy all, and now I'm going to paste for everybody. It's going to go into the chat window. I'm going to call it Steve's Cloud Links for swing trading. Or if you just want to turn them into a day trade, if they trigger, that's your discretion, and then paste. All right, so just expand that chat window, anybody that wants to. and you can receive those cloud ideas. When you go and paste them into your cloud and load from cloud and click the load button, what's going to happen is all of these are going to populate into your price alerts. So you'll want to locate your price alerts. If it's minimized, just go down, and if it doesn't open it up itself, just go down and find them and open it up, and they should be in there from that cloud link. All right, I think we got a couple of charts here that people want to look at. I know somebody dropped one earlier. Okay, if you have time, can you look at SRAX? I've been a long time and finally bailed at $5.13 today. Got busy and did not see it take off until too late to jump back in without chasing. Do you see anything in the chart that would have suggested it was ready to take back off? All right. So the question was SRAX. Got out. Yeah. Well, the question is, barring that green candle, if I can do that. Let's just see if I can do that. Close enough, there's that red bar, but barring that green candle, was there something that you could have done? Well, maybe you could have looked at it and said, we've got a lot of narrow ranges here. This low is higher than this low back here. There's definitely a reason for that level being important. It was resistance all the way back here, broke through, and then it became support. I love it when these pivot lines just show themselves so easily. Resistance, support back here, became resistance, then became support again. Well, this higher low kind of based off and started moving away from that line. The only thing I could see that you could have done differently is giving yourself a price alert, basically, roughly at that level that I'm just going to mark up with an orange line right there. That's probably the only thing I could have seen. Now, beyond that, you had a bunch of little narrow range bars, and they were having little spikes on the bottom, so late day buying was probably coming in and supporting that. I really don't know what you could have done differently other than maybe create a price alert at these highs back here, friend.
Now, friend, were you in that for a day trade, or was that a swing trade?
He was in it. He said he was in it for a while. He or she was in it for a while, and then just got bored and punched out, lost track of it, and then it popped today. And that's how the stock gods work. That's how they work us, just like the golf gods do. Consistency is something that's hard to have.
Okay, so here's what I would tell you, friend, because it looks like you've been in it. He says he's been in it since December, and he got out today. It's like if you, and that's a common problem with a lot of traders. You sit here and you were patient all that time, and then finally you get a nice break on big volume, and it's a classic example of, maybe I see the dip, a couple of times a day where you were probably underwater, and you were probably hoping that it would come back when you should have been fearing that it's going to keep going against you and getting out. And finally, when you get this explosive move on some incredible volume, that's when you should have turned into hope. And what happens is you start fearing that you're going to lose those profits and you get out. Because yes, if you've been in that since December and you got that move today and immediately banged out, you might have to change some of your mental practice as far as hope and fear, because that's a case where, yeah, you should be in it now, in it to win it. Mm-hmm.
You know what you could do, friend, is you could set a pullback alert, and if you don't get it, you don't get it. But like you said, you don't want to chase it, and you're correct. You don't want to chase it here. There's a very good possibility tomorrow on the open, the algos could jam this thing down to 530 or 525. So I'm looking left, again, resistance here, a couple of resistance points here. So you get 5 or 6 of them that line up. Maybe you set a pullback price alert for 530 or 528. And if it pulls back to those levels, especially on the open, and you identify that it's just a knee-jerk reaction of stop hunts happening on the open, you could use that for your opportunity. But yeah, you're probably right in not wanting to chase because you gave up your position. I understand the feeling. We've all been there for sure. Okay. Oh, well, somebody requested SPSH, but then they went offline. If you're still here, let me know. But SPSH, let's. Do you ever use limit orders as opposed to discretionary buys? Yes, Ahmet. Last thing you want to do is a market order. You might as well just bend yourself over a barrel because they're going to take advantage of you. Limit orders are great. what I like are limit delta. Like say, I'll take the offer plus 3 cents. So you could do limit plus 3, and it's just a fill or kill key. If you hit it and something's there, you get filled. If you don't, the order is canceled. So limit plus delta is really nice, especially on fast moving stocks. You've already agreed to yourself what your risk will be in terms of reaching above the offer. So if you send that order and the offer disappears, you're not going to be, hosed at the next few price levels if you have a limit plus a delta. And then beyond that, the limit by itself is a little bit more of a conservative order. I mean, sometimes you can let the price get away from you. Just throw a limit order in there, and you know how noisy price action can be. You guys are watching it. It can come back and hit you on a whim. So try not to chase. Try not to use market orders, and you'll be definitely a step ahead. DXC long at 86.50 for Paul. This will be our last one. Is it DCX or yeah, DXC? This looks like a computer. All right, so definitely something interesting here. We're kind of a trend change looking setup. I mean, if I mark up that prior resistance that was basically taken out and held the last couple days here, we do have a little upside meat on the bone. There's a gap fill for sure at 88.05, it looks like. Beyond that, it might run smack into the 50-day moving average as well. Those are the two immediate levels that I see it could easily achieve, in an hour or 2 hours or a half of a day session. Is this going to be the penultimate low? I don't know. Nobody really knows. It makes a lot of sense where it found a bounce down here in congestion. Here's another little interesting tidbit. When a stock gaps down, whether this is a 5-minute chart or a daily chart, we have a gap down. We have a few days of up movement, sideways, and then rolling back over. That never really ends pretty. I call that the horseshoe, the upside down horseshoe. And you can see it did follow through, shook out the lows back here, and the second mice got the cheese down here at these levels. But that's all easy to look at in hindsight. You guys want to know where we are now and where we can go forward. You want to keep this yellow line here at 85, 81, basically your entry point. You want to keep that as a base and a pivot point and have the price use that as support. I see upside probably up as high as 89 or maybe even 90 to the bottom edge of this candle up here, but you got some moving averages coming down. There's a little bit of meat on that bones, but again, it's been in a pretty ugly downtrend for the last couple months. All right, can you put a limit delta order for a short? Yeah, you can do it. You're reaching down to get short, but sometimes going short, when you reach down and chase the momentum to the downside, the price action can be kind of goofy and try and bounce you back out, only to see at the end of the day it roll back over and go in the direction that you thought it was. All right, so that's it. Good chart course today. Hopefully you guys picked up on the cloud links. If you want them, it will add them directly to your price alerts, and maybe we can have a discussion next week on a few of these. I'll keep this scratch paper that I have written down so I recall the ones we did. And that's it. Let's see, we have a Vivek, stay tuned because we have something for you. Every 3 months, we open up our doors for 1 week for a minimal price of $8.88 that covers the live data, and you can try everything. So your timing is good. And go ahead and stick around. We're going to talk about that right now. So come on in, Scott.
Sounds good, thank you. So a couple items to review on the way out. Let's see where you're at. We do have a podcast, and a new one should be out this Friday. Make sure you're prepared for all of the podcasts. Just search for Trade Ideas Podcast in whatever application you use to listen to them in, and subscribe, and that'll pull up the most recent example for you. And you can download the archives, and you're ready to get the fresh one on Friday. We have a test drive coming up. It starts next Monday, so you should be prepared. If you're not yet a premium subscriber, this is how you can try it. Try out Holly, the other AIs, Holly 2.0 and Holly Neo. Try out all of the premium features. 5 full days. Sign up for the summer test drive. It costs a little over $8, but that covers all your real-time data fees and the extra support that everyone needs that week. And we do these 4 times a year, so you don't want to miss it because you won't have another chance until late fall. So trade-ideas.com/test drive is the URL to go to sign up. Just get your reservation made so you're ready to go next Monday, and then we'll see you there. You have an ebook that's out. Steve and Andy both participated in writing it. It's the Ways to Win in a Post-BTFD Market. We've got 5 strategies for you. just go to trade-ideas.com/ebook and plug in that email address. You'll get an email to your inbox with a download link, and enjoy it. Save that to your desktop, consult, learn, and keep those strategies in mind as the market fluctuates. We have a code that'll save you 15% this month. Alpha in July, it's all caps, so be cognizant of the case sensitivity, but just go to trade-ideas.com/price and use that code on checkout to save 15% on any new subscription. If you're already a subscriber and want to upgrade, just use that same code from your account management section, click on change my subscription and apply the code. Save you 15% off the first installment of premium. Thanks, Steve and Andy. If anyone has any questions for them, email info@trade-ideas.com. That goes into our help desk software. You can follow Steve on Twitter @TodayTrader. We also have got some other Twitter handles like Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook URL to go to, so you can share everything we post with your friends. Thanks all. Thank you, Steve. Thanks, Andy.
All right. See you next time.
Thanks, Scott. Thanks, everybody. I'll see you Thursday.